So after doing hours of research in the markets, I've come across this chart and it's absolutely just game changer. After 40 years, we are going through one of the greatest shifts we've seen in the last 40 years, and it's all changed. I'm going to show you exactly what this is, but also this shift that's happening right now, there's an amazing buying opportunity that's not equities, that's not gold, silver, that's not even the crypto market, that's right underneath our feet right now, that I believe there's going to be an amazing buying opportunity for the next couple of years. I'm going to share that with you. But also, I've been having a real good think about where we are right now in the big macro cycle things, right? Where are we right now when it comes to the stock market, when it comes to Bitcoin and Ethereum, when it comes to gold, silver, and the mining sector, and when it comes to interest rates and the bond market, TMF. And there's a lot of good things that I've been really discovering. I've just spent the last few hours really deep diving. I want to show you exactly what this is and what this is all about. So one thing I want to do right now, guys, is I want to start off with the stock market right now. Okay, because one of the really big things I really want to guide you down the path is what I'm all about is this, okay? Is if I'm looking at the markets, I'm a trader of the markets, okay? I trade the markets and I'm looking for good opportunities to get involved with the actual stock market, okay? So not only just the stock market itself, but for any of say the individual stocks, right? So the thing for me is twofold. One, I'm looking for opportunities to get involved with this, but I'm now trying to see, okay, what is the lay of the land moving forward? Not just for the next week or for the next couple of weeks or for the rest of this year. But what's the lay of the land over the next, say, from now through to 2030, for the next 5 years? What does that look like? And we can start to put the pieces together, hence the reason why I talked about the Wall Street cheat sheet. Now, if I'm actually looking at the actual stock market here, and I'm looking at this Wall Street cheat sheet here, and we're seeing this here, I would have to say, leave a comment in the comment section below, guys. Let me know where you think we are in the stock market here. Now, just understanding where we are right now in the stock market, I think we're getting very, very, very close to euphoria. The market just has kept going up, as you know. And so the thing that I'm looking at right now when it comes to, you can see these are the stock market here, right? We have the NASDAQ here. And what we have here is we have the daily charts to the top and we have weekly charts to the bottom. You can see the daily charts are just zoomed in for this year. Up the top here, and then the weekly charts are more stepped back, looking at the last 10 to 15 years, sometimes even more on these markets here. So if you can see one thing here is you can see this is obviously the NASDAQ weekly charts. And the reason why I like to do this here is because one of the really big things about big sort of cycles in these markets, right? And what I'm going to get to soon about that great, after 40 years, there's a major shift that's actually taken place. Is one of the things that we understand is if you just look at the way these market cycles work and we step back a big 10,000 foot view, you will start to notice that the markets go through cycles, right? And so as you can see through, say for example here, right, this point right here, if we have a look at this point right here in the actual markets, we know there eventually comes a time where the market runs out of energy. And I call these energy phases in the markets. So the energy phases for me is, and I use this to help me gauge what's going on right now and what could be coming real soon. So the energy phases is whenever the market's moving either up or down and we're in a strong movement, say for example right here on the NASDAQ, then that's using energy, right? The market, and it's using energy. Think about the energy as in money, right? What are the fund managers doing? And what are the big boys doing? They're buying it, right? They're using a lot of their energy, aka funds, to buy it up, buy it up, buy it up, buy it up. But then what actually happens? We end up going through what? We end up going through an energy using phase. They've used a lot of their energy to buy it up. Now they've run out of energy. They've run out of funds. Now they need to start taking some profits to build up some more energy to go release it back into the marketplace. And hence you start to get these cycles, these movements in the market, right? So one thing I'm seeing right now is we see that we had this big move up and a big move down from here. And so we're doing the exact same thing right now. And as you can see here, that on the last on this last leg, this is the Nasdaq here. And if I look at the last, say, 10 years, we can see we're pretty vertical right now. And you'll notice, right, one of the best things to do if you're looking for buying opportunities is always, for me anyway, when I'm looking for a buying opportunity, I'm looking for buying opportunities where most people don't want to get involved with it. And as if you've been around the markets now for, say, 10 years or more, you'd know this here. You would know this, that it's always a danger time, like with the actual indices right now, because what goes up really quickly, like it is right now, when it finishes, and we never know when it's going to finish, as in like this big bull leg, and you can see here that we've had this big bull leg through here. That's the Nasdaq. This is the S&P. This is the Dow Jones with breaking out now, and this is the Russell through here. So what's likely to happen is once this corrects, once this finishes, and we may not be there right now, right? The Nasdaq may have one more push to the upside. The S&P may have another push to the upside. The S&P right now is getting close to, say, we may have one more. If we have one more push to the upside, then once again, if I bring up I really believe we're getting close to that Euphoria phase, where the market just keeps going up and up and up. And as you know, the two biggest dominant emotions in the markets is what? The FOMO and the fear. And FOMO is starting to kick into the marketplace. Why? Because if we go down to, say, for example, here, and we go down to, if I go back to, say, I'll get to that in just a minute. But if we go back to this level from here, or even the Nasdaq, and we look at the last, say, 1 year, what has been happening here for the Nasdaq, especially the Nasdaq and the S&P? It's just kept going up, right? Every time we get a pullback, goes up. A pullback goes up. A pullback, it goes up. And so we can see that's from that point through there. We also can see that's the Nasdaq 100, same thing, and the S&P 500, the same thing as well too. So naturally, the people that, and I'm just really grateful, guys, that now I've had over 20 years of experience within these markets here. And now I've learned to not let these emotions get involved, because whenever I start to feel these emotions, which I don't feel that much anymore. In fact, I don't really feel them. I don't get the fear or the FOMO, because I've seen these cycles so much in the marketplaces that I just understand what's likely to come. So therefore I get ready for that, or either just step aside. And so the purpose of what I just said there was that I understand the people that majority of the public would be getting FOMO right now, right? I'm missing out. But what you do understand is that the market will go through these phases, right? We go through these, especially what we're seeing right now. We're in what's called a bit of a blow-off phase. And you can see here, this is the most vertical phase we've actually been in a long time. And the things just kept going up and up and up and up. And so whenever this does correct, and we, again, for the S&P, we may have one more push to the upside, but we are at the Euphoria phase right now. Go back to this chart here. We're at the Euphoria phase right now. And so any more push to the upside is continuing to stretch this bubble here, right? It's continuing to stretch the bubble. So if we get one more push to the upside from here and we go to the 66 or the 6,800, then guess what? Now, again, this is vertical, and you'll notice with every big crash that's happened in history, what's actually led up to that point is pretty strong vertical moves. And this is one thing I was talking about with my 1% group, because I'm with my 1% group every single day. If you're interested in joining that, then you can that second link in the description, you can apply for it. But I was talking to them about this, and I was going through all the big crashes in history. And if you go back to, say, even for example, if I go back to, let's go back to this one here. And if I bring up, say, can I go back to that point there? I can't, can I? No. So I'm going to go back to, actually, let me bring up this chart. I'm going to show you something here, because I think this is really, one thing I've just learned about these markets so much is that the market starts to give us warning signals about what's likely to come. Right? Now, we don't always get it right, but what I mean by this is that if we go back, and if I bring up, say, the S&P 500 here as an example, okay? This is the S&P 500. And we go back to the S&P 500, and we go back to, this is now looking at the weekly chart. if we go back to some of the biggest crashes in history, right? For example, like what was one of the biggest crashes in history? 1929, right? Well, 1929 was a major crash, right? Now, you think about this here. For something to crash, it means that it was in a bubble. Markets don't just crash for the sake of crashing. Crashes happen because we're in bubble territory. Make sense? So a crash happens because we've gone too far, too much, and then things are overbalanced, things are out of control, and then guess what? Then we go through that what's called the crash period. And so if I bring up, say, just for example, I bring up a line chart here as an example, and this is a line chart, you start to see that if you're worried about a stock market crash, or if you're worried about a crash in anything, then what the market starts to give us a warning signal that we could be heading into that real soon from the perspective of the market bubbles first. So for example, this was 1929 here. 1929, and we went into the Great Depression. But what did the market do beforehand, before the market crashed? We went through an extraordinary quality what? Big move to the upside. And what is this? This is where the weekly chart, right? Continued up. And then we went through what? And then it ended with what? A very big, see that big vertical blow off top move? And then it ended. So we went up. And then we had, very last moment, we had this very big move to the upside after it already went to the upside. And then we actually went down from here. By the way, this is what I'm actually expecting, something similar out of the current bubble, because we know we're in that bit of frothy territory right now. We know we've been going up. So over the next, say, month, if we do experience a very strong move to the upside, remember this chart, because this chart here tells us, one, what we need to watch out for if we are now getting into bubble territory, and two, the nature of a bubble is they burst, right? Call them blow off tops, blow off moves. These vertical moves in charts typically end really badly. Now, again, the trading of this is really hard, right? You never want to short it, because just like this point through here, this is a weekly chart here, right? So this is a weekly chart. And if I can I bring up, say, candlesticks here? I can. Let's bring up, say, bar charts, right? So this is a weekly chart here. So as you can see, this is where we may be right now. And by the way, this is what I'm actually expecting in the stock market. And this is also what I'm expecting out of gold as well too. Because I do believe, I'll get to the gold market in a minute, but I do believe in the gold market, we're at the exact same. We're at through, and I'm expecting euphoria to come. So looking at this here, look what actually happened, right? We went up into all this big bull market, and then we had a big vertical move up. So for the stock market right now, we're getting something really similar, as in we've been in a very big vertical move. So while I believe we have more upside to come out of the stock market, you want to really watch. If we start to go vertical over the next couple of weeks, over the next month or two, leading into September and October, if we start to go vertical through here, we know it's a warning sign. Don't let your emotions get swayed by what, one, the market's doing, and two, the noise. The noise in the marketplace at that time is what? FOMO. I'm going to get rich. I've made $1 million. Oh my goodness, this is easy money. That is called noise. Don't listen to noise. Look at signal. What is signal? Let's step back and let's not be part of the 95% of traders and the 95% of the herd who actually end up getting destroyed and blowing up their accounts. Be smart around these times. Know what we're experiencing. If you are involved with it, you need to be very nimble and very quick, because we could be turning real soon into this. So we can see this through here. And as I was saying before, is that we had a very big move up. And yes, then we started this here. If I go back to, say, for example, if I bring up this chart, let's go bring up a black bars again. If I go back to, say, for example, what was the other big market, right? What was the other big crash that we actually had, right? So we actually had all these very big moves. And as you can see, just even by looking at this chart here, what does the market do? How does the market really operate? And so we just want to be smart about this, right? Because the number one thing for us is try to just not only understand what's happening right now, but try to see the lay of the land over the next couple of months, so we can understand what's likely to come, so we can be very aware of it. We may not trade it, right? We may not get involved with that as in a trading opportunity, but we just know what's likely to come, so we can step back. But then when that does come, we can then get ready to actually have a good buying opportunity. All right. As in, for example, as you can see here, what does the market do? We go up for a while, but inevitably we actually end up getting a pullback. We end up getting a pullback. Oh, this is a very sharp pullback. Up, and we get a pullback. Again, this is a weekly chart here, right? So inevitably we go through what? We go through these strong pullbacks. And whenever the market goes vertical here, like we've been experiencing now, we start to get into this danger territory about what's going on right now. Does that make sense? So if we go to look at any market out there, right? Even the 1987 stock market crash. Let's look what actually, now remember I said before, looking at the stock market crash. For something to crash, the chart gives us a warning sign that a crash or a significant drop could be coming real soon. Now, again, caveat, you don't want to just short it because you know it's coming real soon. Because these bubble territories and these blow-off moves we're seeing can last a lot longer than you think. So don't go out there just shorting the market right now because you think the market's going to crash. That's been stupid, right? You don't want to be doing that, because again, I guarantee you that whenever you think the top is in, then guess what? Then you start to see the market just continuing up and continuing up and continuing up in the markets. But if I look at the actual, say for example, the 1987 crash. Remember I said before, for the big crashes that happened in the past, we have gone through some sort of bubble territory. Look what was this here? From 1985, look at all that move to the upside. Up, big vertical move, right? Then what ended up happening? Real quick, we end up getting what? The 1987 stock market crash. Now the 1987 stock market crash happened. It didn't just happen out of nowhere. The market starts to give us warning signals that this is way too overstretched. We're in a bit of a blow off top right now, and we could be getting ready for a significant downturn. Now, one thing I have learned by these downturns is that a lot of the times, if it's very fast and violent on the downside real quick, they end up ending really fast. So if we get, for example, like a market going up, and we get a real sharp drop, boom, like we saw with tariff just recently, these are very short-lived crashes, meaning you get a very big drop here for a month or two, and then that's generally the bottom and we get through there. If we do something like '08, when it slowly goes down, well, then that's slow in time. So fast in price is fast in time. And then we end up picking back up again, right? So for example, in '08, we had a bull market from here, but then '08 did what? That slowly went down, and then we had the big bang, and then we went through there. If we go back to the '08 period, you'll be able to see that through there, right? So we can see here, right? We slowly went down. We didn't just fall off a cliff. But look at this very big bull market here beforehand. So when things start to go vertical and frothy, you never know exactly when the top's going to be in, right? But look where we are right now. We're starting to get to that frothiness, that toppiness. Is that a word? Right, that toppiness in the markets right now. So while I see, and if I go back to this chart here, right? And if I go back to, say, for example, if I bring up, I'll bring up this chart here as an example. So while I see that the markets have continued to be very strong to the upside from here, and while I see it actually possibly continuing up from here, we're getting very close towards the end, and then that's when a significant drop is probably likely to come. And once again, if you start to see this here, now what I've just said there, I'm trying to give you the lay of land of what's likely to, over the next couple of months, we're probably likely to see more upside to come. But we're getting ready, but if that does happen, that's getting towards the end of this move. And because it's been pretty vertical, pretty straight up, this vertical move here, all through here, is likely to correct. And when it does correct, it's probably likely to be hard and fast, or at least we're going to get likely to get through here, right? And we know this, what happens through here. Market goes up, has a push to the upside, and then we start to froth out, right? Market goes up, we get a pullback, and we get a move to the upside. So we can see all this through here, right? We can see what's going on with the actual markets from here. So, and we're seeing this from a lot of perspective of a lot of different stocks. So if I go back to this chart here, all right, and if I just bring up this chart here, look at a lot of these stocks. So not so much Apple, not so much Tesla, but Netflix. Look at Netflix. Once again, every significant hard drop in the markets has come when we've done look at Netflix as an example. Look at Microsoft. So these stocks right now are giving us classic blow off top moves. Now again, I want to sort of reiterate what I've said here. It doesn't mean it's going to end now. We don't know when the end's going to be, right? Microsoft could end up being up at, 600 by the time it peaks out. But when it does peak out, you know what's coming. So you just need to be alert of that. Adobe, not so much Adobe. Amazon's been picking up as well too, right? Look at eBay, right? Look at eBay is just crazy. eBay has just gone absolutely just vertical for me. So there's a lot of Meta as well too. Like look at Meta ever since this whole movement from here. So Meta's been absolutely just going crazy to the upside as well too. Nvidia, we know what's happened to Nvidia. There's a lot of bubbleness. And the chart, and this is what I love about the charts, because the charts give us a real good representation of what is really going on in the marketplace. Right? So we can step back, okay, now we understand what's going on. Because the worst thing you want to do is, one, get tapped into that emotion of FOMO, which a lot of traders will start to do right now around the stock market, right? And then secondly, start to get sucked in by the noise. You never want to get sucked in by the noise, which is always hard. Because if there's FOMO in the marketplace, the noise is, how I made $1 million in the last 24 hours and all this. You're going to see all that coming out. And all this sort of stuff that goes down the path of you'll be able to see all this sort of stuff that's going to come out. So you never want to get sucked in by the noise, which is then started by the FOMO. Because as you do know, the best time to get involved with something is when no one is talking about it. That's where I truly believe that there's a market I'm going to talk about real soon, and that was the start of this thing here, this major, after 40 years of major shift. I believe there's an amazing buying opportunity that's happening on our feet right now that no one's really talking about. And by the way, it's one of the most hated markets out there right now. AKA, it's probably a good time to be looking at something like that when it comes to the markets from here. So that's what I really want to sort of cover there, guys, when it comes to all these stock markets. If I go back to this chart here on my this is my TC2000 platform, you'll be able to see that we've been in vertical moves from right now. All right, we've been in very strong vertical moves from the upside, and we do know we're getting towards the end. Right, we do know that if I bring up my Wall Street cheat sheet, we do know we're getting very close to Euphoria. Now, once again, as you saw with 1929, we can still continue to go up from here. We can still continue to actually start to move, move in this direction. We could be in that very last stage from here, which I do believe. But after that, once again, this is classic bubble frothy territory. Now, now I've said that here, I want to give you the big, massive picture of what I see really going on from here, right? So I've talked about where we are right now in the marketplace of the stock market. I'm going to get to gold and silver right now as well too, because I think a lot of these markets are in the very same territory. So we can see that through there. Now I want to give you, I'm trying to make sure I give you a step-by-step formation from here. Okay, so the first thing is that I see what we're seeing right now. Over the next month, we may see more upside to come, but that's probably going to be the end, and then we're likely to see a very significant drop in the markets. That significant drop in the markets might be Q4 this year, right? And if it doesn't happen, then probably the first half or majority of 2026 is going to be a very weak year for us. And that's where we can see 30, 40% drops in the NASDAQ. We may see a 25 to 30% drop out of the S&P, and so on and so forth. Now, if we understand the layout, remember I said before, what's happening right now? We're in frothy territory. What's likely to come out of the next, say, 6 months, maybe the next 12 months? But let's step out the next 5 years. How is this really likely to play out in the next 5 years? And this is when we start to look at some really big long-term monthly charts here. This is big picture, right? So again, I'm trying to step by step you through the process of small picture, right? What's happening right now? What we could be sort of going into over the next couple of months. Step it out the next 12 months or so. If we do start to see more profit, more upside in the stock market, we're probably likely to see a drop in the stock market. But then what does that mean leading into from say 2027 through to 2030? And as you can see here, that if we did see a move up from here, let's say this is a big long-term monthly charts. Let's just say we did have a move up to say, we had a move up from here and we continued up to say 8,000. Let's just say this thing just kept going up from here. Now, if we do that, once again, this is an extension of the FOMO, extension of the bubble. This is when a lot of people are going to start to get involved with it. And this is when a lot of people lose money, okay? So we go down that path of understanding that. But I really want you to understand the lay of the land for the next 5 years, because the next couple of years, I believe, are going to be one of the greatest buying opportunities we've ever seen when it comes to the stock market. Why do I say that? Because if we do get something like that, and then I see something like a 25 to 30% drop, that is just down there somewhere. So if we did get this here, we did get another move, and then we got a drop down to here somewhere, that there is roughly close to a 30% drop. That's all I'm expecting. Heck, it may even be a little bit more and come back down to this long-term line from here, and that would be a 40% drop from there. Right, let me just make sure that that's right from there. Right, yeah, so 35, 40% drop. And then what I see is then that's probably going to be an amazing buying opportunity to see another really big vertical spike. Because the noise right now, if we do get this, the noise is FOMO, fear, euphoria, Wall Street cheat sheet. Then we end up getting a big crash, right? It happens fast or it happens slow. Meaning if it have a fast move on the downside, it's going to be fast in time. If it's slowly if we have market goes up through here, if we have that, then that fast drop equals fast in time, and then we pick back up like 1987. If we go up through here and then it just slowly goes down like we saw back in 2023, just slowly step down, no big hard fast bang, well then it's slow in time. This is the reason why the tariff situation here only lasted a month, because it was so hard and fast. It was like a black swan event, and it picked up. Same for 1987, right? 1987 stock market crash happened really quickly, and then it bottomed, and then it picked back up. So depending on what actually happens, even if it happens slow, right, we're probably likely to get this through 2020 in 2026. If it happens slow, that could be the worst case scenario as I see. And then we're likely to pick back up. And then I see into 2030, another really big, strong rally to come. Because if you think about now, really stepping out where we are right now, we're only really at the early stages of the AI bubble. Sorry, the AI boom, should I say, not bubble. We're not in the AI. But understand the lay of the land, right? This massive long-term AI boom we're in right now. Yes, we're in it, but short-term we're getting frothy. I believe there's going to be in the next 12 months a very big shakeout of the weekend. And just like I mentioned just today, in a lot of these stocks we're seeing right now, they're very, very, very frothy. The next 12 months is going to be a shakeout of these weekends. We're going to see very big drops. But then on the other side of that, into 2027 through to 2030, that's when I see significant movements to come. So this is the S&P 500, right? This here is the same thing for the NASDAQ. So I actually have a short-term target, just using an extension tool, of 25,000 on the NASDAQ from there. And if I look at and if I go to the NASDAQ 100, as you can see, what do we see from here? We see this here. So even if we did get more upside to come from there, up there to there, something like that, if we did get that move from there to there as an example, but then we actually had a drop, that there is a 40% drop. Right? That's all I'm expecting. But notice this is a very big long-term macro cycle. Right? Why? Because it goes up, up, up. Then we have a drop for 12 months. This is a 40% drop here. It doesn't look like it because we're looking at the monthly charts. But when you now when you really step back in the big long-term macro picture, now you understand where we are right now. Right? So just remember, any big, like even this point through here, this point, see this very big blow-off move? That's what I'm expecting. This is what I'm expecting on the other side of 2025. On the other side of 2026 from there. And this is why I truly believe, if we look at every market out here, so this is the NASDAQ here, and even the Dow Jones, right? If you look at the Dow Jones, this is a big long-term monthly charts that I've sort of put together, just looking at the cycles from here. And as you can see, this is a big long-term cycle from here. And so even though we have these, what's called 16 years of bull markets from there, we see this whole 16 years of bull markets, and we can see that even in these very big long-term bull market phases, we do have these sideways sort of drops. Even this one here, right? That's the 1987 point through there. So we're about 12 years in. We have say 5 years ago to 2030. That's what I believe there. So we're still in the very big macro picture, as I've been talking about. We're still in a very big long-term bull market. And even if we do get what we're seeing right now, which we're in a frothy environment, which then we're likely to see the market having a drop soon, right? And then if that does happen, it's just another one of these things before we see a very good opportunity. So for you guys that are long-term buy and hold, I would say get excited over the next 12 months because we're probably likely to see this play out over the next 12 months or so. And when this does happen, there's going to be amazing buying opportunities because then we're going to really see another incredible boom when it comes to the actual stock market from there. Make sense? So one of the really big things, once again, if I look at this here and I bring up this point here when I'm looking at, say, gold, silver, and the mining sector, right? And so one of the big things that I see here when it comes to gold and the mining sector, I believe gold, we're at the euphoria phase. Or we're through and potentially into euphoria. So if I bring up, say, gold here as an example, and I bring up this chart here, right? This here. Look at this. This is here. This is here, right? So by looking at gold, I believe gold has one more push to the upside because we've already been in a very big bull market, right? And we do know through history, and it's actually quite a simple process, right? When you understand this, if you see any very big long-term bull market, it eventually comes to an end. And if we've been in a bull market for 1 to 2 years, right, we then go through these sideways consolidations or these picking up phases. So when it comes to gold, while gold has been, I'm laughing because I'm thinking people still think the central banks are things that it's like this, but John, the central banks are buying right now. Like they still believe that this whole central banks may be buying right now, but understand where we are, right? Meaning, the reason why I just said that, because they believe gold cannot go down because if the central banks are not going to sell, then how can gold go down? Whoa. So, look at the chart, right? Look at the actual reality of the market. Yes, the market can go down. By the way, FYI, you know the central banks have been buying for a long time. It hasn't just been now, right? So it's not like, oh, they just started to buy right now. So, and again, I'm starting to see the euphoria phases in a lot of people around gold right now. You're an idiot, John. Gold can never go down. The central banks are buying right now, and so on and so forth. And that's where you want to start to be dangerous. That's where you want to start to put on the warning signs, because a lot of the noise is saying this about gold. But gold to me is getting ready for one more strong push to the upside. One more strong push to the upside. And once that happens, get ready for a really big correction. And I believe if we do see this here, to me, when it looks at the gold market, is the warning sign that we're about to see a significant drop in everything. Now, almost everything. And I'll get to that almost everything in a minute here, right? In almost everything. Gold, if we do get something like this over the next month, this is a major warning sign that stock market's likely to peak out soon and a nice, good, significant correction is coming. Gold, silver, even the mining sector. If we do get something like this here and silver has a nice move, so this is the silver chart here, and silver has a nice move up to around, say, the 44 level, and even the GDX, this is the GDX here. GDX continues up from here as well too, and even things like SIL. SIL breaks out. I've got a 60 target here, as you can see. If we see this over the next month, one, if you are in the gold, silver, and the mining sector, I believe this is getting ready for a short-term peak before we see a lot of weakness in the markets. So while I'm bullish this sector here, I am not expecting a runaway rally. Not in gold, not in silver. I believe, and once again, if we do see that, if we do see silver picking up from here, if we do see, and especially gold, right? Gold's going to be my very big, gold and silver going to be my thing here. If we do see gold break out, and as you can see right now, if I bring up gold from here, this is gold with all my moving averages. You can see gold's just been going sideways. And every time we go through one of these sideways phases, we end up going for a move, right? There's a sideways phase, there's a sideways phase, there's a sideways phase, there's a sideways phase. So even though we may break out, just remember, guys, right? Just remember that we've already been in a very big bull market, okay? The best buying opportunity is when the bull market hasn't even really started yet, right? So the best time to be entering in gold was what? Back through here. So if we go back to this weekly chart, we do know we're in a very big vertical move. And if I bring on my G or D chart here, then this is the G or D chart. So while I believe there's an amazing trading opportunity for me, and I'm getting ready for that, by the way, I'm getting ready to trade gold, it's called a trading opportunity. I'm going to be in and out within a couple of weeks, maybe a month at max, and then I'm out. Why? Because I see what's going on. Now, there's a difference between trading and investing. If you're an investor of gold, this is where I really want to go down the path of showing you what I see big picture here. Remember I did with the stock market, right? Stock market was what? Stock market, frothy. We continue up for the next month. We're probably likely to see a significant drop in 2026. But that's going to be then the recession comes and then the interest rates go down and then the printing money comes in and then we have another bigger inflation, right? Which, by the way, if you think interest rates are high now, wait till you see 2030. They're going to crush, right? Major changes are happening. Hence the reason why I had, and that was actually part of the 40-year shift, and I'll get to that in just a minute. But looking at this GOD chart, while there's an amazing trading opportunity, I believe there's a nice, good trading opportunity. Maybe looking at GOD, maybe looking at some options are good for a couple of months, so on and so forth. I'm not in there yet. I still need to wait for my trigger point, right? I need to wait for a good trigger point. If you'd like to learn my actual trading system, guys, in that free trading course, first link in the description, I teach you my trading system, right? So just get access to that and I'll be able to teach you everything for free. So very big move to the upside, right? Really, really, really big move to the upside. So even though we have a big move coming here soon, just bear in mind where we are right now, right? Now, what I do see coming, by the way, is this. Let me bring up this chart here and let me bring on gold here. If I bring on gold, and this is a gold long-term chart, very big long-term chart. This is, now we're talking weekly chart here, right? So let me squeeze this up because this is what I see coming. And I may be wrong, so this is me just having an opinion. And most of my opinions are wrong, so don't listen to me. But I really want to squeeze this up here because this is what I honestly see coming here. Now, again, I could be wrong, but if we get one more push to the up, we're here right now. Big move up, okay? If we get one more push to the upside, I'm actually expecting maybe a rally up to maybe 4,000, and then it's all over Red Rover, right? Then, and again, what's going to happen at this time? There's going to be the emotion side of this market is going to be what? FOMO, right? There's a lot of FOMO coming into this marketplace. Oh my goodness, and then stock market's going on. Oh my goodness, stock market's going on. Oh my god, and gold. Oh my goodness, gold. And like, there's a lot of FOMO, right? And then maybe even the cryptocurrencies do their thing as well too, right? But remember, we're very late in the cycle here. We're very late in the cycle. If you understand Ray Dalio's big debt crisis, you understand where we are right now. You understand that we're very close to entering a recession soon. Now, when I say soon, over the next 6 months or so, right? That's what I mean by soon. So we can see that through there. But then what I'm expecting is a hard and fast, maybe even a nice, good, significant drop out of the marketplace. We may even come back down to 2,000 from here. Now, again, for you guys that are trying to add logic to meaning, say, well, John, how can that happen if the central banks are not going to sell? So how can gold go down? Again, remove that. Where did you get that from? Right? That's noise, right? But if you actually look at the facts of how all these markets operate, in every single market, they all do the one thing, right? The fact is what? When markets are in very big bubble territory, we do go through these corrective phases. Regardless of what you think, hope, or fear, we do go through these very big bull markets, and then we go through a crash. Look what happened here. We had a very big bull market here for 2008, 9, 10. So that was about 4 years of a very big bull market. And then guess what? And then we had a very big, nice correction from there, which was 50%. And now we had a very big move up. Now we have a correction from here. So if I'm looking at that level from here, and I'm showing you this level here, what may happen, and you guys are going to just like go crazy on this right now, especially you guys that are very long-term, right? Long-term sort of bulls out of the marketplace from here. That point through there is definitely going to be one. And if I bring on the cloning now, and then we go to this point from there to there, and we go to that point from there to there, what I'm seeing now is this is what's probably going to happen here. Can I get more out of that one? No, I can't. Can I? No. All right. So this is what I see happening here. Even if I let's actually go down to the monthly chart. There we go. Monthly chart even does a lot better for me. Gives me a lot more justice, right? So, and again, look where we are right now, right? Every time we've done this in the markets, guess what? It's a bubble, okay? It's a bubble. And we can see that. And see, this is why I always say that if you look at every big significant drop in the marketplaces, what has happened beforehand, right? We're in a bubble. So yes, while we may get a push for another few more weeks out of gold and we may hit 4,000, we're getting very close towards the end of this very big move. And the noise and the FOMO is going to kick in real big time. So just be alert of this, right? Being smart and being in one thing I've learned over my last 20 years of my trading career here, and I've really learned over my last 20 years of trading career, is to I'm not tapping into emotions here. I'm not fear, greed. I don't care about my emotions right now. My emotions mean nothing right now. One thing I do know is that whenever we start, if you look back through history, we start to see these cycles happen again and again and again and again, and how these markets operate. And this is where This is where the war sheet cheat sheet starts to come involved, because we go through these massive cycles from here. So we can see it through here. So I'm expecting, looking at gold, is if we do get one more push, if this happens here and we get one more push out of gold, look at that thing. Go back in history. Right? And whenever we've got a vertical move like that, oh my goodness, it is screaming right now. Screaming. Right? Warning, warning, warning. Like it is absolutely just screaming right now of the warning from here. Now, again, there's two sides of the coin here. You never want to just go, okay, well, if that's going to happen, let me go buy some put options on GLD. That is the worst thing to do. Why? Because this thing may have more upside to come. Well, okay, well, when it gets to 4,000, then I'm going to buy some put options. Why would you do that? Who said it's going to stop at 4,000? You see what I'm saying here, right? The smartest thing to do, And this is where a lot of people that are trading the markets and looking for that, I'm looking to make some income this week. It's probably the worst. If you are trading like that, then I promise you're having a very hard year, right? The way that I personally trade is I like to swing trade, and I like to be in things for a couple of months, because sometimes, especially this year, right, there's a lot of volatility, and sometimes it takes a good 2 or 3 months for it to really filter through the process where I can get out for a really nice profit, right? And again, if you're interested in help with that sort of trading, guys, you can apply for my 1% group where you're with me every day, because they are literally 1% of all traders out there. That's why it's called the 1% group, because what we achieve in that room there is only what 1% of all traders are achieving right now. And that's that second link in the description there. But we can see this very big move to the upside. What would be the smartest idea is wait for a really big correction, because guess what? The best times in history have always been what? When there's maximum fear. When was the best time to buy the stock market this year? Is it now? Or was it when the sky is falling? Tariff. You know, right? So wait, you do know something like that's going to come soon. So even something like that on a bare minimum is likely to come. 50% retracement, so on and so forth. Look at this here. Strong move up, big crash. Strong move up, big crash. Strong move up, sideways movement. Strong move up, big crash. You just know this is the way markets work, right? The cycles of things. So again, don't fear, FOMO, noise. Don't listen to that. Look at the markets, because the market is giving us a screaming warning sign from there. And once again, if we go, then let's go back to the weekly charts. If we do get that, right, and then we can go back to, say, silver right now. And if silver does have a very big move, I'm expecting silver to get to 45, maybe even a bit higher over the next couple of months. If we start to see that type of action, then it is game on. And I honestly see that this is the last move out of the markets. And once again, if we go to this market here, and if I bring on these charts here, this is the same for the GDX as well too. If the GDX continues up, has another move to the upside, we're in the final stages here of these markets here, even in the mining sector, right? And even on SIL as well too. SIL, one more move to the upside. We're getting very close towards the end of this move here. So I'm expecting maybe SIL to get to maybe 60, and that's likely to be it from there. The GDX, maybe it may have one more push to the upside to get it to around 66, which is the previous high. Probably even a conservative approach would be even that point through there. So we don't have much more to the upside here. One more final push, and then we're likely to see this thing start to crumble and start to go down and things from there. Now, let me bring this up to here. What I talked about at the start of this video was this thing here. And I really want you to think about this here. What is this chart here? Well, let me show you what this chart is and why I believe right now there's an amazing buying opportunity that's happening underneath our feet right now. And again, I don't know the timing of things, and I don't know if this is going to work out, and this is not, like, I could be wrong here, right? So what is this? What is this? This is what? This is, if I bring up this chart, that 40-year chart is, and if I bring up, that's a weekly chart, that is the 30-year interest rates. And if I bring on the blue, if I bring on just a line chart, that's what that line chart was from the thumbnail of this video, and also and also basically the basic thumbnail and what I also mentioned at the start of this video. So what we can see here is this. All right, what we can see here, we do know there's been like an almost, after 40 years of this being a secular bear market, we do know there's a major shift coming into place right now. And so what that simply means is this. There's two things that's happening here right now. Firstly, we do know that this very big long-term down market from here has now been over. And this is a classic major bottoming pattern. What I mean by that is that whenever the market has a major base and it finds a lot of support and we break down and then we pick back up, this is where markets find major support, major bottoming patterns, and it's the start of a major bull move. And this happens on all markets, by the way, right? And it happens on a short-term level basis and happen on a big, like for example, if you look at Meta, why did Meta bottom out here and have a big move? Look at this here. So roughly around this level from here, see that level from there? It had what? Had all this support level there. So that level there. And then also that. So all these levels all through here, as you can see, right? Look at all these support levels back here. Look what happened. Down, 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 down. Flush down from here. and then it started this very big move to the upside. So we see these, what typically happens at the end of very big bear markets and has what's called a last capitulation move before a very big bull market starts, is like that. This happens on a very big long-term picture, right? On these markets from here. Meaning on the weekly charts, takes many weeks, but it also happens very short-term on what I call a short-term slingshot pattern in the markets on a daily charts. And I love it when I see that short-term, what's called slingshot pattern. If you want to know an example, this is a trade that I did on Ethereum, and I'll show you this here on Ethereum, right? So this here is a trade that I did on Ethereum, and I got into Ethereum here because what? Remember I said before, these markets. See how it actually made this here. See, remember this is what's called a short-term pattern. I love seeing this here. See how we found support, and we broke down. Then guess what we got? We got a move back up, didn't we? False move down, and then it started the very big bull market. That's the reason why I entered there. And beautiful, beautiful, beautiful trade. Now, the purpose of me bringing it up now, let me go back to the 30-year chart here, right? And we can see this here. Why am I bringing this up here? Because everything has changed now. Everything has changed. But change on this scale here takes time, right? It's not like, a week goes past and you're like, well, you keep talking about this change, John. Where is it? It's happening right now underneath your feet, right? So what's likely to happen here is this. Firstly, I believe we're getting very close towards the end of this cycle from here. We may get one more little push to the upside, and then we get something like that going on, right? And then what's likely to happen? Then we get that going on. That's probably going to be into the recession. The market goes down. Stock market goes down. Gold, silver go down. Mining sector goes down. Cryptos go down. Everything gets crushed. Interest rates go down. Printing press starts again. And, away we go again. Okay? So we can just see like that in the marketplace. So if that's the case, if this very big secular bear market is over, and if this is the start of something new, aka a new bull market, what does that mean? That simply means that by the time 2030, 2035, expect interest rates of that. What is this going to do to the debt bubble, to equities, to house prices, to everything? There is a really, 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 after 2030, guys, yeah, there's something really big coming. One of the reasons why I see gold going to 10,000, but over the next 5 to 10 years, I see gold being 10,000. So I see that coming. Now, one thing that I do see is that if that's the case, then one of the markets that I'm really honing down on right now, I'll bring on this from here, is the TMF market and the TLT market. Why? Because if I look at this level from here, this TMF market is what? What is the biggest thing around yields right now is what? The biggest yields, everyone is positioned for higher yields, and the whole thing is like, oh, the bond market's dead. The bond market's not doing anything. Like, no, the bond market's never going to go up, right? Because it's being crushed so much. So if that's the case, if that's where a lot of people are right now, where would we be in the actual cycle of things? Right? Where would we be? Where would we through all these major cycles from here? Right? Where are we right now on yields? Right? This one right here. TMF right now is crushed. The sentiment right now, I believe, is at, I believe anger, right? The bonds are dead, right? This is the exact capitulation anger zone on this chart from here. This sets up for big contrarian opportunities. And that's where like the best trades are contrarian trades. Simply just means when you start to get the emotions of these markets, that's it, it's all over. Market goes down, so on and so forth, right? And that's where like right now into 2025 and 2026, as the economy slows down and Fed eventually pivots even more, right? TMF bonds are likely to go into the hope, optimism, and belief stages. So if we go back down to this level from here, TMF, And in fact, if I just bring this up to this level here, like TMF here, this is the TMF chart here. So if I bring this up, let me bring this up to here. And this is actually the weekly chart here. And I put this here. A break above 45 to 50 level would confirm a first higher high since 2021 from here. So right now, I believe we're getting very close to the capitulation here. Very close to capitulation. And so what I'm looking for, and this could be, and again, as you can see, for me, guys, if you've watched me over the last, say, 6 months, see what I like to do, right? Before it was Ethereum. Before that, it was an individual stock. Then it was the platinum move as well too, right? Then I'm now only honing in on some of the metals and miners right now. And now I'm honing down on TMF, right? And this is what I do with my 1% club and even my inner circle members here. Again, if you need help with this sort of stuff, guys, that's second link in the description there. You can apply for my coaching. But the whole thing about this is that I'm scouring the entire market looking for the next opportunity to do well as a trader. What's that next thing that's likely to make a move over the next 2 months, 3 months, right? And so therefore we can see that through there. So if we see that through there, and then if I bring on, say, for example, just this chart here, this is just the open, high, close chart. What I'm hoping for by looking at this chart is firstly, we can see that through there. But what I'm hoping for is what? A capitulation move. Remember I said before about what caused the capitulation in the start of a very big bull market in Ethereum and even things like Meta, right? There's a lot of the times we end up getting the capitulation move. And again, if I go back to this weekly chart, let me bring on Meta here as an example, because this is the one that I'm just thinking about anyway, right? And you can see this through here, right? Look at this here. So we had this major level through there. It came down, had a major flush down, and then we see how we completely reversed and got back above it. That was the start of what? Started this very big bull market for a long time. So if that's the case, this is exactly what I'm looking for. Exactly what I'm looking for a final capitulation. If we can get that, which simply means if we get one more move on the downside on say TMF as an example, right? And even obviously TLT as well too, right? And this is obviously the TLT market here. Actually, the TLT market actually even nicer here, right? We're at this major support level here, weekly charts. If we do, right? And again, sentiment, people are angry right now, right? So on and so forth. This is the perfect time for me to hone down on all these markets here. So as you can see, there's things happening here right now, right? Stock market, there's things happening all over the place, right? And so we just step back. Notice I'm getting all this from the markets. So if TLT has a big move down from here, which simply means that the interest rates are likely to spike short term, and then we can start to get what's called a capitulation on the downside, we would see this market start to pick back up again. And what that would look like here on the chart would look really simple. There's the support level there. We start to see a move down. If we get something like this going on this week here, right? This week here, and then maybe even something like that going on, and then it pauses and we start to get something like that going on, guess what? That there is now what I call the final low out of the TLT market before we start to see secular bull moves. And then that'll be the same for the TMF, right? But TMF itself has already broken past this support level because it's because of 3-time leverage, right? So so the same thing for TMF here. If I'm looking for a position at a TMF, we can see what's happening here. We can see where we are right now. We've been going down for quite some time. So if TLT does drop, and we do drop like that, that's the wrong color, right? And we do drop like this here, say this week, and we get a drop like that going on, then guess what? What does that mean? Okay, cool, we got that. And then maybe we find a bit of support, and then we start to get a rally right back up again, something like that, and it gets back above it, especially get back above this level. You know what that means, right, guys? This whole thing now has completely shifted. Now, how does that plan out and play out when it comes to this chart here that I started off with? And I'm going to finish this video off with this point through here. How does that play out? Well, if you look at this here, it's all changed. So firstly, that simply means we may get a very short-term spike, followed by a drop to the downside over the next 12 months as we go into recession, as all these things start to pick back up, right? That gives opportunities of what? Final blow off tops in gold. So amazing trading opportunities for the next 30 to 60 days. Gold, silver, mining sector, and the stock market. Then be cautious, because then that's when the really big drops happen. Then we go into recession next year. The market goes down. There's probably going to be really good buying opportunities around the TLT and TMF, those sort of markets. Again, I don't know exactly when that's going to be, and I could be wrong here, guys. So again, let me add. See this guy here? Like, don't listen to me, right? But then what's likely to happen on the other side of that? There, and then we're likely to see that through there. This is when the really big recession comes, and this is when the really, really, really big moves start to click into play.